This video is ACE 1 Orientation Part 2. In this presentation, we'll take a look at the truck lease itself and examine in more detail some of those expense items. Before we get into actual numbers, we should discuss goals. One of Success Leasing's goals is to purchase the best valued tractor unit. Prime looks for the best bang for the buck. We search for the best safety technology warranty, and then tie them together to make the best value. You have the best trade residual. As an independent contractor leasing a truck, there's no such thing as equity in terms of our conversation. Regardless of what the truck is worth, the truck to you is worth the same amount as the day you leased it and the day you turn it in. The cost comparison is similar to purchasing a truck without the worry of its residual value. Typically, we won't keep a truck for more than 4 years. It could be a little different with team operators. With team operators, we'll want that truck turned in after a certain amount of miles due to the warranty expirations and excess depreciation of the equipment. If you look at the document we passed out called the deal, towards the end you'll see that there's a part called Early Out Clause. When the truck hits a certain age by mileage, the truck will be ready to be turned in. The mileage on the truck will determine when the truck will be turned in. Each truck is equipped with a collision warning system. The front-end system measures following distance. The system has a roll stability auto traction control, which uses geometry and body sensors to prevent rollovers. This technology will reduce the speed of the truck and apply braking automatically. There's a lane departure avoidance system with cameras. It uses geometry and infrared technology to make sure the lane control is being monitored. An audible warning will alert the driver if the lane markings are becoming too close. All trucks are equipped with front deer guards in case there's an impact with an animal. This will reduce damages incurred to the front of the truck. There's also the TPMS system, which will ensure proper tire inflation to avoid an unsafe tire failure, as well as reduce tire expense from abnormal wear and tear. This next slide addresses items inclusive to the lease payment itself. Let's look at physical damage insurance on the Bobtail. There's a $1,000 deductible if you have a preventable accident that's your fault. Also, if there's physical damage to the trailer, there's a $500 deductible if the accident is your fault. If you had an accident that involves damage to the tractor, trailer, and damage to the cargo, there's a $500 deductible for cargo loss. If the tractor, trailer, or cargo is involved in an accident and there's damage to someone's equipment, there's a $500 liability insurance deductible for that as well. The maximum exposure and deductible cost to you is $2,500. For Bobtail insurance, you have the same insurance whether you have a load, a trailer or not, at no additional cost. Qualcomm is installed with service and unlimited data plans at no extra cost to you. Some tractors are equipped with a headache rack for flatbeds, which is included in the lease payment. Side boxes are available if you desire to purchase and install them as well. Here are some additional program features. A closed-end lease means you can cancel at any time without penalty. There are differences between a closed-end lease and an open-end lease. Let's take a look at the open-end lease. They are used for things like a house or an apartment rental. Let's say a renter decides to lease using an open-end lease for 1 year. If for whatever reason the renter decided to cancel his lease, he's still financially responsible for the time remaining on that lease agreement, regardless of whether he lives there or not. A closed-end lease means you can walk away from it at any time and cancel it without penalty. All you have to do is return the vehicle, sign the release, and you're free to go. A closed-end lease requires no credit check and no down payment. If you qualify as an A seat for Prime, you're qualified to engage in a lease agreement. There's a 30 to 60 day bumper-to-bumper warranty too. There may be some additional equipment manufacturer's warranties depending on the year model that you lease. On brand new trucks, all warranties are through the manufacturer. It's important to do a thorough inspection of your vehicle. You might not find anything wrong examining it in a stationary position, but when you get in and go down the road, you might discover an issue with the truck. All issues need to be reported to Success Leasing within 30 to 60 days. If the need arises, you're also eligible for a loaner truck. If your truck is broken down, you won't have the ability to generate revenue. If your truck is scheduled to be down for a day or two, it doesn't make sense to get a loaner truck. If your truck is going in for repairs for a week or more, then a loaner truck is a good option for you. Talk with a Success Leasing agent for what options are available. And remember, loaner trucks are always based upon availability. All contractors are eligible for the Retention and Rewards program. If you left the company and then returned, your time served will be credited towards your program. Our Retention and Rewards video will explain how the program works. Remember, previous longevity of 2 years of continuous service at a carrier equals 1 year vested. There's 100% driveline cash flow protection for full term. The driveline includes the engine, transmission, radiator, and rear axle. If you've got a driveline item that prevents the truck from rolling and is not under warranty, the repair will go under one of two categories: under $500 per occurrence and over $500 per occurrence. In either situation, cash flow protection means Prime will repair the truck to keep you running and you can settle it later. APU is the auxiliary power unit. You lease a new APU for 3 years. During that time, you're covered for basic items such as preventive maintenance. It also covers breakdown expenses. After the 3-year time frame, if you choose to keep leasing the APU, it will be at a much lower rate, but you would assume future breakdown costs and maintenance. Breakdown pay refers to the tractor and the driveline. Remember, driveline is the engine, transmission, rear axle, and radiator. Breakdown pay is any of those items that prevent you from rolling down the road for 48 hours. The first 24 hours, there's risk involved, both to you and Prime. In the first 24 hours, there's no compensation paid. At the end of the second 24 hours, and every 24-hour period afterwards, it pays $175 for a solo and $240 for a team driver per day. Remember that there are rewards for completing your lease. We'll get into those numbers in a little bit. There's also a release bonus, and it's very simple. It's $5 per week credit towards your last lease. If you leased a truck for a short-term lease of 20 weeks, you'd have a $100 bonus coming to you. If you lease a 2 or 3 year truck lease, the releasing bonuses are larger. You must release within 7 days of the return date given to Success Leasing. Refer to your lease deal handout, page 5, to give you details of current years, models, and pricing. We recommend that you pause this video and look at page 5 now. As you see the numbers, the lower numbers are for older trucks and higher for newer trucks. Numbers will fall between those numbers depending on the age of the truck and options. All trucks need licenses and permits. Currently, the federal highway annual tax is $550. That pays for usage of our nation's highways. If you take the $550 tax and divide it by 52 weeks, it averages $10.58 per week. For the balance of license and permits, refer to page 5 of the deal for the annual total costs. Certain shippers require that anyone pulling their freight be covered by some form of insurance to protect them in case of on-the-job injuries. Certain states require anyone traversing their state to have such coverage. This does not have the same coverage that workers' comp insurance usually provides. Similar to a conventional workers' comp coverage provided by Blue Star, Prime will assist you with Blue Star claims. Other weekly charges are $15 per week operator statement. It's similar to an earnings statement. A payroll class module has a payroll settlement with revenue earnings and cost per week. An operating statement is mailed to your house each week. It has 6 columns with 6 multiple categories. This statement reflects the cost you've accumulated for that week, plus the costs of earnings per mile of that year. And there's a lease-to-date dollars figures in a lease-to-date cost per earnings per mile. These documents are very helpful at tax time. Our next item is the fuel card usage charge. Your Comdata fee is $1 per week. You're free to use the card as long as you use it within the Prime network. Remember, the Prime Network is any place that Prime negotiates business within your service directory. You will get a discount. The fee is not $1 per transaction, it's $1 per week. The optional CPA tax service charge is for our Abacus CPA office located in our Springfield, Missouri facility. Their current rate is $6.75 per week. This will organize your payroll and to prepare you for income tax filing. It's an optional cost and you're not required to use them. The best way to understand mileage charge is to relate to events in our daily lives. When you buy a car, the value of the car is based upon mileage, the condition of the car, and year of the model. As an example, let's say you bought a brand new car. A new car's allotment are 15,000 miles driven per year. That's the mileage considered normal wear and tear on a car. When you drive that 15,000 miles per year on your car and then decide to sell it, a certain residual value placement and resale placement is set by that 15,000 miles driven per year depreciation. If you averaged 30 or 40,000 miles per year on that car, it'd be considered a high mileage vehicle. But a 1980 model with 40,000 miles on it would certainly be considered a low mileage car. A car manufactured a year ago with 40,000 miles on it is considered high mileage. A high mileage car in a lease would be considered an excess mileage car. In the refrigerated division on a 36-month lease, it's averaging more than 2,900 miles per week. On the flatbed and tanker side, they're averaging 2,750 miles per week. It's a longer lease, so the averages would be slightly different. It's not very often that a solo driver would accumulate enough miles to incur these charges. Let's look at an example of a team that averages 4,500 miles per week. There's 3 tiers for mileage. From 2,901 to 3,400 miles, the charge is 5 cents per mile. At 500 miles at 5 cents per mile is total $25. From 3,401 to 4,100 miles, the operator is charged 3 cents per mile. That's a 700-mile range. At 4,100 miles, the $25 has already been charged in Tier 1, plus $21 for Tier 2. Exceeding 4,100 miles to indefinite range is a penny per mile. In this case, the operator averaged 4,500 miles. So from 4,100 to 4,500 miles, those 400 miles at a penny per mile is $4. In this case, we've exceeded Tier 1, Tier 2, and Tier 3. That's $50 per week. The amount spent in excess mileage is paid to Success Leasing. Success Leasing will pay you an amount equivalent to the excess mileage charges based upon completion of all terms of your lease agreement. It's a wise idea to save a couple of pennies per mile for those unexpected miscellaneous costs. In this example, you'll see fees like money transfers, agent fees, tolls, and eating out. You don't have to budget every penny, but leave some room for miscellaneous and unexpected expenses. Let's move on to the end of the lease benefits. There's an incentive to complete your lease. You'll get a bonus for completing your lease. The lease completion incentive is 5 1/4 cents. That is 0.0525 on a calculator. Multiply that by miles driven in that period of time. Remember that the unused money in your tire fund is your money. In addition, the excess mileage charges are as well if it applies to you. Let's take a look at total miles and multiply by 0.0525 cents, minus driveline repair, which go to repairs under $500, which means you're responsible for repairs over $500, that you and Prime will split the cost. In this case, total miles multiplied by 0.0525 cents minus driveline repairs under $500 and minus half of the driveline repairs over $500 equals what your lease completion incentive payout would be. This solo driver is averaging 2,500 miles per week. 2,500 miles per week at 156 weeks is 390,000 miles. Take that 390,000 miles and multiply it by 5.25 cents, and that will equal $20,475 in bonus. In these next two items, the driveline repair under $500, and the driveline repairs over $500, the $1,000 in this example is not an automatic. It's just a historical value that we've seen in the past for such repairs. So this example has $20,475 minus $2,000 in driveline repairs, which brings us to $18,475. In this example, we have an unused tire fund. The estimate is based on half a cent per mile multiplied by nearly 400,000 miles. That's where the extra $2,000 comes from. In this case, there's no excess mile charges because the operator averaged 2,500 miles per week. The charge begins at 2,750 miles per week for flatbed and tanker and 2,900 miles per week for the reefer units. This operator in this example would have made a lease completion bonus of $18,475 plus a tire fund of $2,000 for a total due to the operator of $20,475. Take note that this is before any shop repairs, body damage, or wash and details charges. Let's look at lease completion for a team. In this example, we have a team averaging 4,800 miles per week. Notice the length of that lease. As mentioned earlier, there's an early out clause based on how many miles and year model of the vehicle. The chart for the early out clause is all laid out in the deal that was handed out earlier by your instructor. Let's take a look at these numbers. 494,400 miles at the same rate as the lease completion incentive, which is 0.0525 cents per mile. This team so far has generated $25,956 in incentives. The driveline repairs are not an automatic $1,000. This number is based upon historical averages. There's $25,956 minus $2,000 in repairs. This is a total incentive so far of $23,956. Next, we look at the unused tire fund. Remember, it's a half cent per mile in the unused portion of the tire fund. So there's a little over $2,000 of that fund refunding back to you. This is just historical average. Note the excess mileage of $5,459. That money has been paid to Success Leasing incrementally during the term of the lease. That money is now coming back to the operator. The total payout of $25,965 minus $2,000 in repair and adding back $2,000 in tire funds plus $5,459 in excessive mileage charges brings the payout to a total of $31,415. Remember, that's before repairs, body damage, wash, and detail charges. At the bottom of this page is a reminder that this lease is based upon a 103-week lease. If the same operator would have averaged this for a 156-week average, which is a full 3-year lease, the payout would be $47,580. Remember the formula. The volume of work multiplied by the rate of your work generates our revenue. Obviously, a team can produce a higher volume of work than a solo driver. Teams have higher expenses in every category except one. Fuel costs could double with a team, even at the same mile per gallon. The tire fund could double because of more miles driven. The good news is, the truck payment cost would be the same amount, no matter if it was a solo driver or team driver. That means there's double the income to pay for the truck lease versus a single income to pay for the truck lease. The truck lease is the same cost, but the cost per mile would be half. We've covered a large portion of the lease these last two presentations. You're probably asking yourself, when does my payment start? The good news is, the first week you're in orientation. For example, if you lease this Thursday, this Friday you'd have zero payment. The first payment is set up into payments over the first 52 weeks of your lease. The first settlement, which is the second week of being with us, you only have to pay a portion of that payment. If you lease a truck on Thursday, Thursday to Friday is 1 day of your payment. The following Friday, you pay that 1 day of payment. As you can see, it's 1/7. Week 2 is the first week on the road. So to summarize, week 1 in orientation and week 2 is your first week of running with 1/7 of your payment due. Week 3 with Prime, week 2 of running. Week 1 is orientation. Week 2 is your first week of running with only 1/7 of your payment due. And week 3 with Prime is also week 2 of running. First week orientation, second week of running, and third week you'll have a full payment. Your first full payment in 2 weeks from this Friday is today, if today is Thursday. Now you're ready for Module 3.